Hello, I'm Rick Basinski, Chief Economist at IBISWorld. I hope all is going well in these very challenging times. Like my last four webinars, I will focus on the labor market and the recent surge in unemployment. Although, as you'll see, we actually had some surprising improvements last month that I'll explore today. I've been using the Bureau of Labor Statistics household survey rather than the payroll survey of non-farm businesses, although they typically track very closely. And a few reminders. First, the general purpose of these presentations is to analyze the impacts of the COVID-19 pandemic. This is episode 12 of the series. And now that parts of the economy are reopening gradually, my motivation is to identify employers that will rehire quickly against those that will lag seriously behind. Also, which industry segments face longer-term challenges. Hopefully, this will be useful in assessing credit quality for both consumer and commercial lending, all tied to employment prospects. Realize that any serious analysis is fraught with uncertainty. New virus hotspots are emerging, and there are still concerns that a second wave may be in the offing. Moreover, the timing and strength of a general economic recovery is unclear at this time. Nonetheless, here's the surprising and much welcome improvement in the national unemployment rate in May. Sure, we are still higher than peaks hit during the Great Recession, but most pundits were expecting a continued erosion. So this is good news. This figure illustrates the nearly across-the-board improvements in unemployment rates by sector in percentage terms from April to May. Construction and manufacturing, two areas that are often lethargic during recoveries, really stand out here. So this is a bit of a surprise. Maybe the biggest surprise, though, was the 2% improvement in durable goods manufacturing. Employment here usually chimes in later than sooner. Leisure and hospitality, this includes entertainment, recreation, accommodations, and food services, appear to have benefited by recent reopenings in many areas of the country, as did the broad other services category that I'll discuss shortly. Here are, as a point of reference, unemployment rates by sector this past May. Note that despite improvements in leisure and hospitality, rates here remain incredibly high. Today, as indicated by the red arrows, I'll be covering employment in the professional and business services area and the other services sector. Let's start with other services, or the two-digit NAICS 81, for those of you familiar with this type of industry coding. This graphic compares the Bureau of Labor Statistics household data for this group against the national unemployment rate. As you can see, they track each other very closely over time, although the April other services spike was much greater. The rectangle encompasses the April to May easing in unemployment rates for these. I'm going to drill down into the other services sector by dividing it into three subgroups: repair and maintenance, personal and laundry services, and finally, religious grant, professional, and other related organizations. Then, as an additional step, I'll employ IBISWorld's forward-looking industry risk ratings as found in our early warning system. This will help identify which industries are vulnerable and which are relatively safe over the next 12 to 18 months. Consider repair and maintenance services as listed here. I calculated the average employment growth rates for both the 2009 through 2011 and the 2012 through 2014 periods. This representing the last cycle's downturn and the first recovery stage. In the cells of this table, I colorize the industry risk intensity, where red pinpoints high and green defines the relatively safe. All of this derived from IBISWorld's industry risk scores. As for the yellow cells, I'll have some cautionary remarks. Employment in repair services don't look all that promising, since replacements may very well be an affordable option. Employment opportunities for machinery maintenance and heavy equipment repair services are shaky. The reason is that their key buying industries, manufacturing and construction, have an uncertain future despite recent improvements in their respective job markets. On the other hand, with reopenings and travel restrictions being relaxed, auto mechanics and oil change service employees should be okay. However, Furniture repairers and reupholsterers don't historically recover quickly, so I'm a bit cautious for these. Employment in the personal and laundry services category is a real mixed bag. Many in this category are expensive and are not likely to recover quickly, plus they are vulnerable to downside risks. Industrial laundry and linen suppliers have suffered in the face of business closures and are at risk due to some local reopenings that may come in fits and starts. Hair salons and dating services are, on the other hand, looking pretty good, and many of us, including me, having been stuck at home, might need help shedding a few pounds. Employment in religious, grant, professional, and other similar organizations elicit a cautionary tale, as it's very sensitive to downturns and can be painfully slow to recover, especially in times like these that are riddled with uncertainty. That's why I yellow flag this group. They require close monitoring before a surprise exigency surfaces. Moving on to professional and business services, or the two-digit NAICS 54. This chart compares the unemployment rate for this group against the overall national rate. As you can see, like the other services category I just covered, they track each other very closely over time. However, in sharp contrast to other services, the spike in the unemployment rate for professional and business services in April was comparatively muted, as evidenced in the rectangle. Therefore, it's going to be revealing to drill down and, using IBISWorld's industry risk ratings, expose where the problem areas are in the following subgroups: legal, accounting, and tax preparation, computer, architectural, engineering, and related industries, computer management and tech consulting, and advertising. Let me turn my attention to the employment situation in legal, accounting, and tax preparation services. Tax preparation and conveyancing didn't perform particularly well during the previous cycle, both during the recession itself and the initial recovery phase, as indicated in this table. Since conveyancing is concentrated in title, settlement, and related services, employment here will largely hinge on the strength of the housing market. Here there are tailwinds, low mortgage rates, but headwinds as well in the form of dubious prospects for household incomes. Computer, architectural, and engineering services employment is very much a mixed bag, with several red and yellow flagged industries, as you can see here. Interior and fashion designers typically provide luxury services that are currently at risk. This is likely the case for at least another year. And comparatively low oil prices are expected to limit industry employment growth for geophysical services. The yellow cells define caution, as these industries are in large part driven by housing, and the jury is still out on the sustainability of a strong rebound here. As for employment in consulting services, according to IBISWorld's industry risk ratings, science R&D looks promising, bolstered by demand from pharmaceutical and also semiconductor machinery manufacturers. Other areas aren't as fortunate, as you can see from this table. I'm particularly concerned about management and HR consulting, given ongoing stress on outsourced services related to tight corporate budgets and high corporate debt levels. As for environmental consultants, their near to medium-term fate will largely be determined by the results of the November elections. Environmental issues are always contested, always political, but now, I think, add a dose of opportunity, as the fickle political winds may indeed shift. The employment and ad agency and related space, obviously many nasty issues to reckon with here. IBISWorld's industry risk rating scores point to a gloomy outlook for workers in this space. And this arena is the high price spread. Indeed, many high wage folks here. And how about direct mail businesses? They must be close to the bottom of priorities as per tight corporate budgets going forward. For IBISWorld clients that haven't seen our COVID-19 impact updates on your My IBISWorld accounts, Here's author Anna Miller's take on the advertising agency industry. This is just too good for me to even try to paraphrase. Just pause and read it if you have an exposure in this area. Okay, I'm done for the day. Thanks so much for joining me. All of us at IBISWorld, like you, are shaken by the COVID-19 crisis and the social turmoil that has reemerged here in America and across the globe. Let's all hope for the best and, better yet, work toward it. My next webinar will conclude the theme of investigating employment issues. I'll focus on healthcare, education, and other areas I may have missed in previous employment-related webinars. Hope to see you then. Stay safe, and Godspeed.